The Canadian automotive industry has been hit hard by U.S. tariffs over the past year, putting pressure on Ontario manufacturing. Stellantis has been among one of the companies rolling back production, with its Brampton plant sitting idle as production for the Jeep Compass SUV shifted south of the border. Joining us now is Andrew Bell, who's standing by down at the auto show today with Trevor Longley, President and CEO of Stellantis Canada.
That's right. We've got the man himself here, Trevor Longley, President of Stellantis Canada. Thanks for giving us the time, Trevor.
Thank you for having me.
Now, you just came over from Nissan Canada. You headed up their operations in October, and you went into a firestorm. I mean, there was indignation, there was frustration when Stellantis said, we're moving production of that Jeep from Brampton, Ontario to Illinois. So there was a lot of headlines, there was a lot coming at you as you started the job.
Yeah, well, I mean, it's an interesting time for the automotive industry, but for Stellantis in particular, I think Brampton is a hot topic, and it should be a hot topic. It's an important topic. There's many Canadians that have depended on that location, and it is something that factors into our future. It's something we're working very hard to figure out the long-term sustainable future of.
So that plant will produce cars again?
Well, I can't announce anything today, but I can tell you that we are working proactively with our government partners, with Unifor, to find solutions that meet the needs of the Canadian public today. That means that we find solutions for the tariff situations that have been imposed, where electrification is going. We want to find a sustainable option for Brampton.
Was the move of that product to Illinois because of President Trump's tariffs?
It was because we were on an operational pause as we were looking to figure out what the future was going to be here, and the timing just didn't work, and now we're working on what the next product could be for Brampton.
Right, because it's 3,000 jobs roughly.
Well, right now we have a number of people that were on layoff and continue to be on layoff. We're trying to do what we can for those employees that are currently on layoff. We've extended benefits, et cetera, to make sure that they're taken care of as best as possible. And we're working on that next solution to get as many people back to work as we can.
On a more cheerful note, you're still making cars and minivans in Windsor, Ontario. We're looking at one here, this one, the famous Caravan, and then in the distance there, the Dodge Charger. You just were ramping up production of that one last year, but so it was a low year, but you still made 160,000 vehicles in Brampton, in Windsor. Sorry.
Absolutely, we're actually one of the only OEMs that actually made more cars in Canada than the previous year, and we're going to do that again this year. And so as we ramp up the Charger, which is an exciting new vehicle, North American Car of the Year, that's going to add volume there. I think many people know, and we're announcing today, that we've added the third shift in Windsor, which will go live this upcoming week, and we've actually already now hired 1,700 new Canadians in Windsor to build these cars.
That's good news. I probably should just loop back. The federal government making threatening noises. From the reports I've seen, Stellantis got just over $200 million for expansion, and they're saying we want some of that money back. Can you update us on the negotiation?
Yeah, well, I can say we're having productive dialogue with the federal government, and that's not to avoid the question. The reality is that we want to build cars in Brampton. We've been in Canada for 100 years. We've been making cars in Canada for 100 years, and we want to continue making cars in Canada for the next 100.
The Prime Minister just announced the outlines of a new auto policy, and one of the salient features would be people would face tariff pressure if they weren't making cars in Canada. They want to bring in vehicles from outside the country. What is your reaction initially? I know you don't know the details.
Yeah, the details need to come for sure to fully kind of answer the question, but anything that protects Canadian industry and Canadian auto production, I think, is a positive move in the right direction. For many years, it's been more cost effective to import cars into Canada than it is to make them here, and obviously we've been heavily invested in this country, and we want to make sure that we can continue to do that well into the future.
Why has the cost base been high in Canada?
Well, it's a high-cost country, just generally speaking. This is a first-world country, a great economic country, and has certain advantages to why we would build here. We have great manufacturing, great people, great healthcare situations, so it makes a lot of sense to make cars in Canada. The issue of there's some lower-cost areas in the rest of the world
where Mexico.
Yeah, where competitors have stationed themselves, and so we've had a more balanced approach to this, and we want to continue to have a more balanced approach to this.
Just tell us about one good news story. You're keeping more than 600 researchers and developers of drivetrain, including electric drivetrains, in Windsor.
Yep. Yeah, well, I mean, our investments aren't just limited to the production side. So we have research and development facilities in Canada. We've added more than 600 engineers over the course of the last year or so, and we're going to continue to double down on that. Canada is a place where you can get great people, well-educated, and really can lead us to the next generation of vehicles for Stellantis. And that's not just Canadian vehicles, but global R&D.
I mean, that's interesting. More than 600 researchers and engineers. And of course, the intellectual property will go to head office because it's not a Canadian company, but it's still a lot of high-paid jobs.
100%.
Yeah.
We are fully focused on where we can enact investments in Canada that are going to pay off for Canadians, but also pay off for our global footprint.
What about the Chinese cars coming in? I know it's a bit of a red herring. It's going to be only about 4 or 5%, and they're going to have to build a dealer network and stuff. But what was your reaction when you heard the federal government was going to allow in up to 49,000 Chinese cars?
It's something, again, we need to know more about where this is going to go. Obviously, they've talked about limitations to that, and that it needs to meet North American or Canadian safety standards, etc. I think it's something we need to be pragmatic and thoughtful about. There's a lot of things that come with it. Like, are we on the same competitive footprint in a market economy, non-market economy? Are we on the same competitive footprint in terms of access to markets and the investments we need to make here in Canada? And if we're on the same competitive footprints, like, competition's a good thing. The question is, are we on the same competitive stand?
And what could Canada do to bring down costs? I know that, as you say, we're a first world country, hard to compete with Mexico in those terms, but are there simple things that Canada could do?
Well, I think choice is a great leveler of cost, and so providing more options for Canadian customers creates more competitive options. And that doesn't mean needing to go to China. As an example, electrification is a big part of our investments in Europe. There's vehicles and brands that we have there as a constellation of brands, over 14 brands within the Stellantis portfolio, that could meet the needs of Canadians. And how do you grease the wheels for that to happen? That is accepting UNECE standards.
Yes.
And allowing that to come over, and without having to do a whole bunch of redevelopment and add cost.
Yeah.
And so can we bring more competitive products, especially that meet the EV needs of Canadians?
Yeah, but I meant the cost as a manufacturing base. Is there anything that springs to mind to bring that?
Well, it's volume and synergies, and so you need the volume to get the cost down overall. The tariff situation complicates that scenario, but we need to think about, is there other market opportunities for Canadian manufacturers to ship to as well? And so those are things that maybe hadn't been thought of in the past, but those are things that are coming into all of our considerations now.
Just one last question. I've heard, and of course it's going to vary, that you need to have about 200,000 volume in a plant to really make it work. But you're not at that, so you're not manufacturing fully at the economical scale in Canada?
Yeah, well, the more you're utilizing the plant, the better the costs. There's no questions about it. And so this is where, when we think of Brampton as an example, the more that vehicle that we eventually put there meets the needs of Canadians and meets the needs of export markets for us here, and gets to the volume standards there, we can bring costs down. And so that's why it's so important to pick the right vehicle with the right cost structures so that we can get going there.
Trevor, thank you very much.
Thank you so much.
That's Trevor Longley, President of Stellantis Canada.